Today, we would like to talk about the digital asset universe. This will include, of course, crypto assets, but also much more. We have seen already a couple of security tokens coming up, and we can expect that the security tokens topic will pick up now that regulation is getting more clear here in multiple countries. And therefore, we have a webinar or panel discussion today with SDX from Switzerland, with Tim Grant, and with Custodigit, also from Switzerland, with Peter Hoffman, right? So therefore, to get started, I would like to quickly ask you, Tim and Peter, to present yourself, your personal background, please, and also what your company has been doing so far and what is it doing currently, to provide some context for the audience, such that in the later coming discussion, everybody knows who is speaking here, what's the background, and what is the company doing. Who wants to start? Peter, would you like to start?
Yeah, I can start from my side. Thank you very much, Philip. So Peter Hoffman, my name, I'm the founder and CEO of Custodigit. Custodigit is providing a cryptocurrency or digital asset platform to the regulated financial service industry. It's really a one-stop shop platform so that regulated financial service providers can actually provide digital asset services to their customers. Background of myself, been in the financial service industry for, let's say, 15 years, something like that, always at the intersection between business and the IT. And really started with online trading topics on everything digital in the financial service industry.
Okay, excellent. That provides some context. And now, please, also some more information about SDX, please.
Hi, everybody. Thank you, Philip. Peter, great to be here with you. And Jan, thanks for setting this up with the Disrupt Network. By the way, good morning to everybody. It's actually 3 o'clock in the morning here in New York City, so I get the prize for getting out of bed early today. I've been in financial services for about over 20 years now. First 15 years were very much focused on institutional capital markets, working in the investment banking side, on the hedge fund side, and a number of startups. But for the last 5 years, I've been very focused on blockchain and digital assets, with a big emphasis on capital markets, institutional capital markets. You know, the largest, most liquid markets in the world. Very, very happy to have started just under a year ago in last March as the CEO of Six Digital Exchange in Zurich. So Six Digital Exchange, we've been around for about 2.5 years. We started in 2018, so quite an extraordinary bet. If you look at Six Group, which many of you in Switzerland will be familiar with, but to give you a sense, Six Group is running the financial market infrastructure in Switzerland, but also now in Spain. So we have the exchange, Swiss Stock Exchange, and the Spanish stock exchanges. We have the CSD, the Central Security Depositories, and we also have a financial information business, and we run the banking rails, the payment rails for the Swiss National Bank in Switzerland. So we have a pretty significant footprint of traditional financial market infrastructure. Now, SDX is our expression of the next generation of financial market infrastructure. And actually, what we call that is digital market infrastructure. We want to try and differentiate between the traditional rails. And what we're building at SDX is an exchange and a central securities depository, a CSD, that will go live later this year. We've spent a lot of time and effort building this out. It's the first time anyone's done it to this level of rigor for regulated assets. And we're really focused, until now, we've been very focused on regulated digital assets. So the kinds of assets you would see for traditional equity, debt, and derivatives, etc. But now we're moving very much more into the cryptocurrency era, which takes us to our discussion today. So Philip, that's I think a good overview of where we are.
Yes, it is. Thanks very much. So maybe one question back to you, Tim. Six is the national, so for those of you who are not well known in Switzerland, right? Six is the national exchange in Switzerland, you know, like by far the number one, right? Market share, I don't know it, probably 80%, 90%, 95%. And SDX is a subsidiary for new types of business, new types of assets, and so on. That's basically how we need to see it, right?
Yeah, exactly. And I think that the statement that's really worth saying out loud, and remember that Six Group is actually owned by banks.
1 second, I accidentally muted you, Tim.
Oh, no worries. So Six Group is owned by banks. So we're not publicly traded as an entity. We're actually owned by the clients who we work with, and governed by them. And I think the important statement to make around Six Digital Exchange is that that back in 2018, just after our new CEO at the time, Joost Eichelhoff, came in, there was a big open dialogue around the future of the industry and where things were going. And the assessment was made that digital assets and DLT as an enabler are going to be a very significant part of the future state. And with that statement made, believing that one day, many years into the future, maybe it's 7 years, maybe it's 10 years, but one day if we do our jobs right at Six Digital Exchange, then we would anticipate that traditional infrastructure would actually transfer over to this new infrastructure that we're building. And that's the significance of the visionary bet that's been made by Six Digital Exchange. And so yes, we're wholly owned by Six, but we are that expression of the future. And that's the way that everybody looks at it, and constant dialogue with our clients about where we go. And I think 2.5 years into the journey, we can now start to see that the market really is moving in that direction. Everything we're seeing would suggest that was actually the right bet. So we're very excited about that, Philip.
Okay. And last question, just to get everything right, SDX, you cannot do trading of cryptocurrencies yet as SDX, right? But this might be on the roadmap. We will talk about it. But this is basically, it is the future, yes, and we will talk about it. But trading of cryptocurrencies has not started yet. That's basically, that might be on the roadmap. We will talk about this later, right?
Yeah, that's right. I think it's the original formulation of SDX was to focus on the regulated digital assets that we're all very familiar with. But I think what's happened, but there was always a view that if the cryptocurrency movement started to go mainstream, which is a very big part of what we want to talk about today, that we would move in that direction too. And this partnership that we've made with Swisscom and Signum, investing in Custodigit and working with Peter and the team at Custodigit is an expression of that. So yeah, that's exactly what we want to talk about.
Yeah, makes extremely much sense. We do not have in Germany similar approaches by Deutsche Börse. Börse Stuttgart is going in a similar direction, but actually really just similar. It's another technique what they are applying. Okay, excellent. So let's get started. And one more question about Peter. We can store any types of asset with Custodigit. So this can include crypto assets, right? And this, of course, can also include security tokens and potentially also other assets. Did I get this right? In case you answer, Peter, please first unmute yourself. I'm seeing the microphone icon.
Thank you very much, Philip. Yes, in general, that answer is correct. Yeah. Although I have to say our main focus is really on the cryptocurrency side. But of course, also having the capability and ability already in the platform also to store security tokens, for example. We support that as well.
Okay.
That's
and
correct.
one last question, which still applies to your introduction. In the future, security tokens will also create corporate actions, for example, dividend payments, share splits, right? General assemblies, voting rights, and all kinds of things happening with security tokens, but not with Bitcoin, for example, right? So custody technology will be much more than just storing an asset. It will also store basically the technical fundament to execute corporate actions. I think this is something huge, which in my personal opinion makes custody more than a commodity. People in the financial domain typically say custody, this will be commodity business. Why should we invest in it? It's uninteresting. There are tons of players out there, but actually I think it's much more than storing an asset. It's storing assets. Yes, this alone will be huge, but it's also storing basically the access key for all kinds of corporate actions and stuff. I guess you would agree here, right? So you would also say no, custody is not just a commodity. It's much, much more.
I would say, right, that's part of the whole life cycle of an asset.
Yeah.
And it's really a good example you just mentioned, because there I also see not only from a DLT perspective, but also from a digitalization perspective, really an interesting case. You mentioned that the corporate actions around shares. So we do have for example, still interesting opportunity is the digitalization of the General Assembly, right, for example. And we do have partners with whom we work together who are actually tackling those synergies opportunities right now. And totally agree, it's not only the storing, it's also the asset servicing, which is an important and also relevant part of the whole life cycle.
Excellent. So we now got the scope of your companies and of your activities. Yeah, let's talk about crypto in specific. We saw a quite strong uprise in crypto assets in the last 3 weeks over Christmas and between the years, and also over the New Year's Eve and so on. What's different now in comparison to the earlier bull run back in 2017 when the Bitcoin price rose up until 19,000 plus minus something US dollars, right? Now we are around 35,000 US dollars, coming down a little bit from 42,000 US dollars, right? What's different now? What's both your opinions?
Well, look, it's a bit deja vu all over again in some respects. I found Bitcoin early in 2015, or crypto and DLT in early 2015, and before that had no experience at all, had no idea what any of that was. And obviously, it's worth making sure everybody recognizes, these have been around since 2008. Bitcoin came into being in 2008, and was very much a part of a different kind of libertarian movement. A lot of coders in the background around the world getting involved in this space, and it really started to become a little bit more mainstream. 2014, 15. That was the year that we saw a lot of engagement from financial institutions. R3, where I used to work, came into being. Hyperledger came into being. Then it was the Enterprise Ethereum Alliance. So there's all these kind of movements, and there's many, many more now. And then we saw, I think most of us remember the original run up in 2017, and it was amazing. It was so same sort of time of year. It was Christmas. We saw it go up, and you saw a big influx of capital. And in many respects, if you just looked at the graph, you might think it's the same again. Just basically doubled. And last I looked, first thing this morning, it was about 38. So we've kind of doubled. Basically from where we were then. I think the major difference, and it's quite subtle, and I think it's important to highlight this. The original run-up was based on, at the time, it was an ICO craze. It was really many people will call it a bubble. There was a lot of ICOs that came out. That the fuel for that rally was the original run-up from the original kind of zero start for Bitcoin and Ether. And a lot of these coins actually exist on the Ethereum blockchain. That was the blockchain that really the open blockchain that provided the capability to create additional tokens in a very straightforward manner. And so all of the coins that we saw mainly came from that. But a lot of that money actually came from the original run-up in Ether. A lot of the original early Ethereum investors and Bitcoin investors had put that money in. It wasn't, and it was very much a retail focus. Not so much, there was very limited institutional activity back then. Most regulated financial institutions wouldn't go near that sort of stuff back then because it was very uncertain. The regulatory environment was very uncertain, and frankly, the availability of any kind of infrastructure over and above Coinbase. Some of you remember, believe it or not, I bought my first Bitcoin for $250 many years ago, and that was through Coinbase, and it was very basic stuff. I think then you go into a crypto winter, as many people called it, for the sort of intervening time, and now look at today. I think the big significant difference today is that since 2017 through 18, 19, and 20, the institutional marketplace around the world has become much more facile with this asset class, with how it works, with what it means, with where the value is. And you can do some fairly compelling analysis, fairly definitive analysis, to show that the wall of assets that have come in to drive this next phase of growth in this marketplace has really come from an institutional base rather than a retail base. And actually the price action that we've seen, and rightly you point out, Philip, we got to, on Bitcoin alone, we got to around 41, 42, and it retraced, but we're back at 38, and that's only a few days ago, right? And so the stability that we're seeing, it is relatively volatile. I mean, we're seeing, you can see 5, 10, 15, 20, 30% moves. That's very unusual given, if you look at traditional markets. But those sorts of moves, although it's volatile, that's pretty stable to kind of come up and stay at this level. Now, I'm not here to tell everybody where the price is going. Please don't take any investment advice from me. But it does feel like the fundamentals of the shift would demonstrate that this is an institutional backing for this move, which I think is a big difference and a big change. And some of the further implications of that we'll talk more about. But Peter, I'll pass to you for your observations as well.
Yes, please.
Yes, thank you very much, Tim. By the way, right, we hit again the 1 trillion market cap this morning again.
Okay.
Did it again, so that's quite great news.
I did give seconds, so that's historic, 18 minutes past 9.
Yeah. As Tim mentioned, right, I would say the fundamentals really changed between the bull run we have seen in 2017 and now the latest price development we see right now. Maybe in addition to what Tim mentioned before, I would also say that the asset class itself got more mature. I heard quite an interesting expression where they said that now Bitcoin especially is now an investable asset class. It's not only pure speculation, it's really an investment you can make. And there was also quite an interesting study from CoinDesk, if I'm not mistaken, where they did an analysis if you are actually allocate a certain percentage of your portfolio to cryptocurrencies, digital assets in general, and what the impact on the Sharpe ratio will be. And they simulated it, and actually the Sharpe ratio increased if you are allocating a small percentage of your funds to cryptocurrencies, which reflects again, right, it's an investable asset class. And that for me is also one of the major differences between 2017 and now the current development we are having.
Excellent. I think that's a good point. We could also explore a little bit more the type of new development pushed by Michael Saylor. I think that's the name from the US guy, right? Who traded parts of his US dollar denoted treasury from his software company into Bitcoin. So in case more such corporate buyers are coming to the market, then we have basically a new type of investors which so far stood aside and were not able in the market. So typically we talk about retail investors. That's the last 12 years, right? Now we have been starting to talk about smaller professional investors. I would argue that large-scale institutional investors are still largely, like 95% investing and being not interested in Bitcoin. So this might still come in the future, but a new type of investors, the corporate treasurers, that might be interesting for the future. And this also surprised me last year. Therefore, Michael Saylor, for example, is also dubbed one of the hottest newcomers in the crypto world, right? Because he really surprised the entire world. Yeah, so but let's talk about institutional and professional investors. what do we mean with institutional investors? Please highlight this. I guess that's pension funds, sovereign wealth funds, right? Family offices, large-scale asset managers, smaller ones, and so on. What's their challenges? Can they easily invest in crypto assets? Is it difficult for them to do it? What's basically the challenges and the risks institutional investors are facing?
Yeah, Philip, that's the big topic. That's the big topic of the day. And look, I think I can tell you, if from where I sit, you know, our client base at SIX is the biggest financial institutions in the world. We deal with everywhere from the Goldmans and JP Morgans, and of course our owners UBS and Credit Suisse, the big institutional banks around the world, and then the next tier. The more regional banks, or the big Swiss banks, but the big, you know, European regional banks and the Asian banks as well. And then you get down, you've clearly got the market makers as well, which are very significant in size. They're providers of liquidity, very important pieces of the market. And then you've got the buy side. And of course, that comes in many flavors, not just asset managers and, you know, pension funds, but also wealth management and ultra high net worth. And of course, Switzerland is one of the sort of biggest concentrations of that in the world. So that's a big wall of money. Now, I can tell you firsthand, and I think Peter can confirm this as well, that the conversations, not just in this run-up, and I think that's an important statement to make. This isn't just a reaction to what we've seen in the last 2 months. I mean, this has been, there's been extraordinary price action. I think that's going to capture everybody's attention when you see asset movement like that. But this goes beyond that. You know, this is several months ago and the beginning of last year, there were already a lot of those big institutions asking the question, how do I get access to this asset class, either as a principal, as I want to be a market maker or trade my own book, or on behalf of my customers, whether they be asset managers themselves or high net worth individuals or retail. And the number one challenge that they face, and these are all generally regulated institutions and very significant, and they're not in a position to get involved in what I would call flimsy market infrastructure. They need something they can trust. They need something that works. They need something that is tested and secure, and they need to be able to audit that, and also they need to be able to make sure that you've got your AML and KYC in place. You know, this is extremely important pieces of the puzzle. This is standard fare for any asset class that anyone might want to get into. Now, the challenge is that there's fragmentation right now. There are pieces out there. You've seen evolution of some of the crypto players starting to provide institutional capabilities. But the crypto players tend not to be where the big institutions want to go. They kind of like to go where they see some level of consistency from the past. And I think what the market's waiting for is that trusted infrastructure to be available. They're waiting for that you know, the old adage goes, you know, nobody ever got fired for using for hiring IBM. I think that's now becoming a very old adage for 20th century, but everyone knows what I mean. You know, you need to go somewhere where you know you're gonna get the trusted service that you need. That, I think, is the next frontier. That's what the institutional clients are looking for. That's certainly what we're always aiming to do at SDX, but I think that's the core really of what Custodigit is about. And with that, I think I'll let Peter give his perspective on this as well.
Thank you, Tim. Right. Totally agree. Right. In my observation and all the discussions I had with regulated financial service provider, really the sentiment changed over the last 12 months. Before, it was not even an option to go in cryptocurrencies from a financial regulated point of view. And over last year, that really changed. But as Tim also mentioned, right, the hurdles especially for a regulated financial service provider to tap into that asset class, they're still quite high. We do have some frictions in the market, for example, on the liquidity side, on the regulation side, as well as on the cash management side, just to mention a few. And meaning that if a regulated financial service provider wants to tap into that asset class, they need to solve that first before really focusing on the market opportunity on their side. And that's what they are looking for, really established, trustworthy partner who can provide all the security and all the audits so that they can really focus on the market opportunity, really serving their clients with digital asset and not worry that much about the infrastructure and how it actually works underneath. And that's exactly also the mission, right? Why Custodigit and SDX are working together in order to take out all these market frictions and provide a way to access digital asset in an easy, efficient, and secure manner.
Okay, so this also explains largely why you are partnering up, right? And basically how you are dividing tasks between trading and custody. You want to add something on this, because I think it's pretty clear that for institutionals and also other investors to engage with crypto assets, you need to have trading, which needs to function, of course. You need to have secure custody. That's also pretty clear. You might also need to have further functions, for example, AML analytics, right? Tax reporting and other things. You want to add something on basically how you are partnering and who else might have added services such as taxation or AML analytics?
Actually, yeah.
Peter, go for it.
Okay, take it from my side, right? Yeah, as mentioned before, the motivation why SDX and Custodigit are working together is really to provide this infrastructure, and the services we want to provide are actually on two different levels. And it's really depending on the strategy a regulated financial service provider wants to take. We want to provide the technical platform in order to enable financial service providers so that he can provide on top of that digital asset service to their customers. But that's one service part we are having. On the other hand, and that's also really an important service offering, is on top of the Custodigit platform, SDX plans also to provide business services and really addressing the issues, the frictions we are having in the market, for example, in the brokerage topic, in the cash management, which is quite tricky, right? We are talking about a different kind of cash management and settlement. It's all pre-funded. So there are certain challenges to overcome as well. And also all the AML business services on top of it. Really, the goal is to try to reduce the barrier for a financial service provider who wants to actually tap into the cryptocurrency or digital asset market in general.
Okay, excellent. Tim, you want to add something?
Sure. I think that it's worth highlighting the background as well. Picking up from the point we're making before that, I think hopefully all of our listeners today kind of either you're well aware of it or you're getting a good sense of this evolution. This is a big evolution. Starts in 2008. Here we are in 2021 with a brave new world in the 21st century, an entirely new asset class. How does everybody get access to this? How do we engage with this in a secure way? And I mentioned, we focus very much top down in terms of institutions. We look at the biggest ones and we look down. SIX in particular is not really looking at B2C. We don't look at directly for retail. We look at the intermediary banking institutions. Now, if you're in that category, you need some level of trust. And I've run a startup before, and running a startup it is thrilling. It's exciting. It's the entrepreneurial element is wonderful, but you need some level of credibility if you're going to work with very big, important institutions. Credibility cannot be underestimated, especially when you're dealing with a new asset class like this, which has some level of uncertainty, and you need that extra level of comfort that you're dealing with, truly institutional players who understand how you do business. So clearly that's who we are at our core. SIX is a part of the establishment. We've been in this space for quite a long time, decades, in fact, and we're first movers in the space. Now, when we looked out to the marketplace and we think beyond SIX Digital Exchange, that regulated entity and the regulated digital assets that we're starting with, and we think about getting into the enabling access to the cryptocurrency markets, we made an investment in a company called OmniX last year, around this time last year, which is for the order and execution management for buy side and soon to be the sell side to have access to markets. When we got to later in the year and we started looking out, we realized that one important piece of the puzzle is going to be to enable our customers who already trade in the traditional exchange and traditional services to have access to this. And we didn't have that capability in time. We don't have it. Now, we looked outside to the market, and we were very quick to establish that Custodigit was a great opportunity. And I'll say why, because it's backed by Swisscom and Signum. And Swisscom and Signum is a really interesting combination. Swisscom, very trusted in the Swiss market, obviously the dominant telecoms player, really good reputation around the world. I think it's fair to say Swisscom has a reputation for innovation. Signum, another big new player, very much, I think, positioned as one of the most exciting new digital bank plays globally, with operations in Switzerland and Singapore, which we think is important. You saw there was a separate announcement that we're operating in Singapore at SDX as well with our partners at SBI. Now, when you look at that and you bring that together, that's a really compelling base. But then you need a product that makes sense. And when we engaged with Peter and the Custodigit team, what we saw was an evolved product that actually is ready to go to market. And that's the key. We have a solution here that if you are a wealth manager, a private bank, a small retail bank, if you need to facilitate access to these markets for your customers, and you want to be able to do that in a way that's trusted and secure and relatively straightforward, that's what Custodigit allows. And that was our rationale for joining forces with Swisscom and Signum, and working now directly with Peter and the team to bring the OmniX piece of the puzzle, Custodigit together. And in that, there's an answer. There's a really compelling answer to get access to the markets and facilitate activity in this new marketplace. So that's the way that we look at it, Philip, when we look at this market.
Okay, excellent. And well, so far we talked about Bitcoin and Ethereum or Ether. What other developments do you see in the digital asset space? Where do we stand with regard to security tokens? And if we use the word security tokens, right, what exactly do we mean? Is it debt tokens? Is it equity tokens? What exactly do we mean with it? And what kind of developments do you see else in the digital asset space? That would be interesting to see.
I'll let you take that
from our
question
side.
Yeah.
Yeah, that's very much, Peter, thank you. It's very much in our wheelhouse. That it's a great question because it highlights what I'm going to call convergence. And I've been talking about convergence for many years, and now finally it seems like we're seeing this happen. But what do I mean by that? Well, there are two pieces. There's the cryptocurrency area, and to answer the question, Philip, on that one, I think there's very interesting developments over the next couple of years as we see a new crop of utility tokens, the sort of crypto tokens on that side. But I'll pass and go to the security token side. Really, what I call regulated digital assets. So, the classic debt, equity, could be loans, commercial paper, bonds. It could be public equity, could be private equity. The assets that already trade. There is a compelling reason for those assets to go into this new digital realm. And the example I always cite is you look at the media market. You look at movies. They used to be on film reels, then they were on VHS, then they were on laser discs, then they were on DVD, then they were on Blu-ray, and now they're digital. The mechanisms for distribution and viewing these are totally different than they were even 10 years ago. The movie's the same though. The Casablanca's the same movie when it was, on film as it is now. It is digitally, and that's the way I think in one part to look at this, security token area, is that the debt instruments are still the same. The companies are still the same that can raise and issue capital through that route. It's the medium through which it is done that is different. Now, SDX is explicitly set up to be at the forefront of institutional regulated digital asset issuance or security token issuance. So when we go live in Q2, our goal is to bring issuances to market that feel like the same movies, but have that different medium. And that's exactly with Custodigit what we also want to facilitate our clients to be able to engage with, because that's new rails, a new medium. You need new types of ways of doing it. Now, the other part that's exciting in this this sort of regulated digital asset realm or security token realm is the new things we can do that we couldn't do. So just like in the media world, there are new types of engagement that you can do, new types of movie you can make that you couldn't make before, more interactive perhaps, you know, the use of that analogy. Now we can go into non-bankable assets or assets that traditionally were never able to be traded in this way. And it really reduces the barrier to entry for say, real estate assets or art assets or any kind of hard asset in the world to be tokenized and to be traded in some way, and be in a regulated realm. And that's, you know, especially in the private markets, it's just the tip of the iceberg where we are today. So I think, Philip, what we're going to see in the next few years, and we want to fire the starting gun at SDX on that, not just in Switzerland, but actually globally, for this movement to happen. I think if we fast forward to 5 years from now, we should find that there's a burgeoning market in this new medium, these new security tokens, Philip.
Okay, one follow-up question. When will security token trading or issuance will be possible with SDX?
Yes, great question.
Date already, or is it already live?
We are not already live. It's been a long road. You know, we're building basically entirely new infrastructure, and particularly the centralized security depository is built on blockchain. And this is absolutely the first time that this has been done in the world at this sort of level. I'm delighted to say that we're at the very final stages of delivering that. We've tested a lot of our capability. So over the next few months, we'll be finalizing the process with FINMA. And depending on when FINMA actually grants us the license, we're hoping to get to somewhere in the region of somewhere in Q2 where we can go live. And we fully intend, and we're working with issuers, we're working with banks, we're working with the buy side already to prepare for issuance. So fingers crossed, all going well. We'll see some real highlights in the press that we can talk about in Q2 around debt and equity issuance, Philip.
Yeah, that sounds amazing. And we all know that it's not just depend on you, it also depends on the regulatory bodies. And therefore, it's also, of course, possible that it might take a little bit more time. I think that's pretty well known. Peter, you want to add something on this, talking about digital assets others than Bitcoin and Ether?
Yeah, I guess Tim mentioned it quite well, right? We are at the tip of the iceberg. It's really starting the whole movement. We see a lot of POCs going on in the market, but also the first real world implementation. And from my point of view, for the next 12 months, I see that really the first real world implementations will be available in the market, will be used. Still at the beginning, but really the movement is going on and is gaining momentum.
Yeah,
and
definitely.
From my personal point of view, I guess with the timing Tim just mentioned, that's a perfect timing for the market.
Excellent. Okay, so do you see other financial service providers, you know, like besides custody, besides trading, entering the market, who are also trying to connect to your systems? Could be, I don't know, fund reportings, fund administrators, maybe even the regulatory bodies. You know, maybe the Swiss regulatory body asks you to get a node to maintain, like, let's call it a control or monitoring of the market in real time. Do you see such financial service providers also trying to interact with you or trying to join this entire development?
Well, look, from our side, Philip, we definitely do. There's a very real and public example, which is the work that we're doing with the Swiss National Bank and the Bank for International Settlements here at SIX on central bank digital currency. And I think that's a really important piece of the puzzle. Clearly, stable coins are a piece of the puzzle, but truly, you know, central bank fiat currency issued in digital form, that's going to enable all kinds of efficiencies for us in the institutional marketplace, and it will filter down into the retail marketplace as well. So that's a great example of where that's actually happening, and we're going to continue that work this year. We're also working with the Banque de France, and we'll anticipate working with more central banks. But I think there's even more than that, and I think it's actually a great question. Blockchain, even aside the digital assets element, which the blockchain effectively acts as the rails for, allows us to do a lot of very interesting work in mutualizing processes in financial services. And I think we will see a lot of movement now, because blockchain in itself, and it's worth mentioning, you know, enterprise blockchain as a standalone has also massively evolved in the last 5, 6, 7 years, and is now ready. I mean, we're going to go live with a piece of infrastructure this year which is fully regulated and completely on the blockchain. You know, native digital assets coming into being and living for their entire life cycle on a blockchain. This is an extraordinary moment, and there are other great work going on, especially on R3's Corda, but also in enterprise Ethereum and Hyperledger and others. Now, that affords us new business models and new ways of solving problems that we've never had before in many respects. And I know, I think I said this maybe even 5 years ago, but I think it's still true. Look back to the beginning of the internet. Did we really understand back in the late 90s what kind of applications we would see 20 years later? And I don't think we did. We couldn't really have envisaged it. I think that's true here. The sky's the limit. I think we've got to have some entrepreneurs and smart thinkers coming in and really thinking outside of the box, how to solve problems using this technology. And I think that's what we'll see. So just look at the last couple of months alone, the number of large, important, significant financial institutions, technology institutions, payments, PayPal, for instance, is another example of what we've seen. Square's been in the place for a while. Central banks and regulators. It's just a topic that's everywhere, and it's not just the beginning. This is very much in the journey. So Philip, to your point, my prediction would be this year's a pivotal year, but coming into the next 5 years, I think we'll see a really big movement in this space.
Okay, excellent. Anything to add on this question? Otherwise, let's talk a little bit more about regulation. Peter, you want to add something?
No, I couldn't agree more to Tim.
Okay, excellent. How do you view the role of the regulator? We know that in Switzerland, you have a very, very progressive regulator. There have been multiple decisions in the parliament. We also know that the FINMA engaged in talks at that time with blockchain companies and token companies back in 2016 and 2017, being very open, sitting down, talking to them, understanding it. Same with the Swiss National Bank, as far as I know. What is the role of the regulator in generally? Do you feel treated well in Switzerland by all these developments, if I may ask this? Maybe another follow-up question here. Why is so far the regulator not going one step further and basically asking or demanding a node in the network to monitor what's happening in the market in real time? Because this is something I've never seen as a demand on the side of a regulator so far, but it would make extremely much sense, right? Tim, maybe you start with this question and then we proceed with Peter's.
Sure. Sure. Look, I think the way to look at this is, and I've been fortunate enough to be working with regulators and central banks since the beginning. You know, when I was at R3, we did the original work with the Bank of Canada, Project Jasper, the work with the Monetary Authority of Singapore, Project Ubin. You know, we started those projects and some of them still live. And I've talked to regulators and central banks all over the world in the last 5 years. It's been a very slow but very steady and increasing level of engagement. Some are more than others, and I think it's great for the Swiss jurisdiction that FINMA and the Swiss National Bank are absolutely at the forefront. You know, the legislation that we've seen come out and will be coming into place in 2021 for DLT in financial services is groundbreaking on a global scale. But the level of engagement from FINMA and SNB is fantastic. So we feel very supported. To your question, Philip, FINMA have been a tremendous partner. We've gone on this journey together. We've educated each other. And when we come out with our licenses later this year, that's a big moment for the global regulatory landscape, and I think we'll see more of the same. Same with the SNB and other central banks. On your point around observer nodes, I think that's actually a really, really good point. And I remember talking with the central banks many years ago about this. It's interesting. You're absolutely right. There's not been a demand for this, but I think when you look at, for instance, the work that we're doing with the SNB, they see the level of transparency and control that they can get on a DLT network is very appealing to them. And that's certainly now, it's not so much that it's demanded. I think it's just implicit in the way that we build this out. Similarly with FINMA, in terms of what the kind of reporting that they need to see of what we're doing on our regulated platform, it's really facilitated by having this DLT platform, and it certainly anticipate that they will have potentially observer nodes that they can use to really monitor the system. I think you're right, Philip, though. I would agree with the sentiment in your question. I think it's still, I think the true understanding of the kind of control and visibility that you can see with the adequate privacy in security in place, I think that's important. Privacy is obviously very important to all of us and to institutions. I think the true value and power of that has yet to be understood and demonstrated. So I think your question is spot on, Philip.
Okay, Peter, you want to add something on the role of the regulator, because you have also been starting very early, and therefore I guess you have also been in good contact with the multiple regulators which are out there.
Absolutely. I would say in general, and especially with FINMA, it was really a good interaction we are having. We felt treated well from that perspective. That was really, although sometimes a little bit a lengthy process, a constructive collaboration. I would really like to highlight the importance of regulation, right? We talked earlier about institutional investors. You even mentioned pension funds, for example, Philip. And for pension funds, they have quite strict obligations in what they can invest. And as long as an asset class is not regulated, thoroughly regulated, they are not allowed to invest in those asset classes. And if you really want to make the next level in digital asset or also in cryptocurrencies, we need to have this rigid regulation around those asset classes globally. And as soon as we have that, then really the wall of money, as Tim mentioned it, the wall of money will flow in. So regulation for me is really one key driver of adaptation for all these DLT-based asset classes.
Okay, makes sense. Good point. So I think we are also slowly coming to an end, I guess. But I would like to talk a little bit more, a little bit more about a centralized versus decentralized perspective. After you have addressing multiple topics, security tokens which are centralized, Bitcoin which is decentralized, where do you see will be the assets of the future? Yeah? Will there be decentralized assets in the future? Will there be more centralized assets in the future? Will there be movements from centralized assets, including an issuer, to decentralized assets? We see it, for example, in the world of decentralized finance, where companies start decentralized. They need to employ people, and they are trying to become decentralized to also get out of the radar from regulators. So therefore, what's your opinion on this discussion of centralized versus decentralized, and also the movement towards a higher degree of decentralization?
Well, we could talk for hours on that one, Philip, but I think it's a great question. So look, my view on this one, and I do have a pretty strong view on this one, is that decentralization and centralization there's nothing actually new about that in the current financial system. If you actually look at the way traditional 20th century market infrastructure is built, there's a level of decentralization implied in there, actually, in the way that it's distributed around the world. Perhaps not with the same spirit that Bitcoin and Ethereum and others are built out on, but it's certainly there. My view is that decentralization has a huge value It can be incredibly efficient. It can allow for new ways of building business models and products and services. And I think we're going to need to use a lot of that going forward. I think it's a piece of the puzzle that's undeniably very, very powerful. My statement, though, is the following. I think the real DeFi needs to stand up, and I don't think decentralized finance is what DeFi should stand for. DeFi should stand for really the ability to get democratized finance, better financial services for corporations, governments, and individuals. That's what we want. That's the future state that we really want to build, is faster, better, cheaper for all of us. And decentralization has a place in that, no question. You look at the sort of so-called DeFi protocols out there, they are growing, they are really innovative. More and more assets are going in there. I suspect that Peter and I and our teams will be working more on DeFi asset staking as we go into the future as well. So there's a place for it, but it's not the means, it's a means to an end. It's not the end itself. I think we've got to remember that the real goal here is faster, better, cheaper financial services for all of us. Faster, better, cheaper capital formation. Faster, better, cheaper liquidity formation. So I both love and to some extent hate DeFi in the sense that it makes us think that decentralization is the answer, but it's not. It's just a fantastic, powerful tool, but only one of them. So that's my strongly held view on DeFi, Philip.
Okay. Peter, you want to add something on this discussion? Decentralization, DeFi, and so on? Of course,
Yeah.
it's also need custody, right?
So from my perspective, I believe in a hybrid model, right? Really, the DeFi we are talking about is driving innovation, and I really like the ideas and then financial products. DeFi is coming up. But again, if we want to have a look on mass adoption of such products, of such financial services, in my opinion, it's still a right to play for regulated financial service providers in per se, which are centralized. Because I see the benefit they are providing, they are protecting really the interests of the investors behind, in combination with regulation. And we are coming back, right, with that to actually the topic of our panel discussion, the trust. And financial service providers, they are providers of trust with protecting the investors. And that's, from my point of view, really an important benefit for the whole DLT space, that you have those trust providers in order to facilitate mass adoption. I'm not sure if a purely decentralized approach will have the same adoption as a hybrid model.
Yeah, that's true, but still we see decentralization also of custody business and also decentralization of exchanges. But I would agree that there will be all kinds of approaches, all kinds of business models and so on, but especially in case institutional players are engaging with digital assets and crypto assets or issuing them, of course, then centralized approach might be best and also might be required by the regulators, right? Yeah, so let's come soon to an end. Where do you see the future of digital assets? Should people get involved more and more? Should institutional investors and financial services providers engage with the topic? How should they start? Should they contact you? Should they read the Bitcoin original white paper? So what's your advice?
I'm a little biased there, right? I would say get in contact with us.
I think that's right, Peter. I think the train at this point, the train has left the station. You know, a $1 trillion asset class is not something to argue with. Every big financial institution, regulator, and central bank is looking at this. It's not something that's going to fade into obscurity. It's something that's going to grow from here. And for really good reasons. This is an asset class that retail and institutional need to pay attention to. And I think that Peter's absolutely right. You know, in terms of if you're in any kind of wealth management, family office, banking institution, then get in touch with us. We would love to talk to you about what we're doing and how we can work with you through Custodigit and our digital asset gateway product to facilitate access to this market in a trusted, secure way. We'd love to help you with that.
Excellent. Sounds good. And what would be your advice to startups? Do startups still have a chance now that large-scale players are entering the market? Is it a chance for a startup? Is it also a risk? Is it maybe a signal that all the crypto and digital asset stuff is so toughly regulated that it's not an area to play with for startups? I guess no, right? That's the answer. But still, what would be your answer or your advice for startups?
Peter, you're in a startup. What do you think?
Yeah, I would say, right, with now, or in general, coming in the heavyweights entering the market, I would say it's positive, right? Because all these established, trustworthy companies help to grow the market, make the market more mature. And from an ecosystem point of view, I'd say everybody can profit, benefit if the market is growing, if the market is getting more mature. I see it as a positive sign for the whole ecosystem, to be honest.
Yeah, I agree with Peter. Having been in several startups, it's a thrilling place to be. I think we need startups, Philip. I think we need more, especially of kind of the younger players in the marketplace. We need the 21st century mindset. We need people shaping the future of the industry who are going to be driving the industry in the future. So I think I would encourage startups to come together. It's not easy. It's a particular kind of journey, but it's needed, and they will get the visibility of institutional backers and can. It's the only way we're going to do it. We can't rely on the big institutions to be driving innovation alone. We need that startup movement. So the more the better. Get involved, be bold, and go do it.
Okay. And another way is, I think what I truly like what you have said is that basically blockchain, digital assets, crypto, and so on, it's a growing area. It will create more jobs. It will create startups. It will let companies grow. So it also makes sense for young people to get involved because, of course, companies like you and others, you need to employ people at some point of time, right? So therefore, I would perfectly agree that will be an exciting year. It started in a fascinating way, and I guess it will proceed like this for the next 11.5 months up until Christmas, right? Yeah, thanks much for this discussion. You would like to make a closing note, both of you, and maybe I then also tell you that I really enjoyed this talk. I really enjoyed the panel discussion. I also learned a lot, and then I wish you all a very nice rest of the week.
Thank you very much, Philip.
Thank you, Philip. Thank you, Peter. Goodbye, everybody. Get in
Thanks,
touch
Peter,
with us.
Tim, and Philip for being here. Here are the contact details for the attendees. Here are the contact details of Peter and Tim if you're interested in getting in touch.